We're bringing together some of the brightest minds in finance and economics to answer questions about the new normal of work, everything from which jobs are going extinct, to what the future workplace will even look like in a post-pandemic world. In this episode, we're speaking with Gary Shilling. His financial and economic advisor who has a track record predicting recessions. So what does the workplace look like once the workforce is vaccinated? Well, it's gonna look different. Obviously, people have gotten used to working from home. And we are learning how to use telecommunication technology that's really been there, but we never use it. I just got awesome client calls using Zoom, that's becoming standard. But maybe people will be working 1 or 2 days in our offices, as opposed to being there full-time. The polls show that over half of the employees would like to not spend full time in their offices, if people really want to work from home more of the time during a week. Companies are going to have to adapt to that. Employers are legally allowed to fire employees who refuse to get the vaccine. But will they actually go through with it? That's a good question. I think it's probably going to happen. More on a state-by-state the basis was a lot of those regulations are formulated and enforced. If an employer in effect says you got to be vaccinated, and some people say, I don't want to be, then the other employees are gonna say, wait a minute. And I rather suspect we're going to end up with some kind of identity cards. You want to go on an airplane, you're probably going to have an identity. The card that says you've been vaccinated. I've been vaccinated. And when I was the second time, the nurse said, take a picture of this card with your cell phone and carry it with you, that shows that you're vaccinated. Well, I've got the card, I've also got the picture. Which jobs or industries do you think will go extinct in the next 5 years because of the pandemic? I don't know that the pandemic itself is going to force any into extinction. But the trend toward bricks and mortar stores going out of business will probably be speeded up. We've seen that now with a pandemic because, ordering from home has been speeded up. And it's one of the things you get used to it. I find myself ordering stuff online that I would have gone to a store, but I go, hey, wait a minute, I can order this, and 2 days later, maybe even tomorrow, I've got it on my doorstep, and I don't have to go out to malls. Again, it's nothing new, they're already in trouble. Online is now, I think, 24% of total retail sales. And this is going to further increase the demise of malls. A lot of malls are really dependent on restaurants as anchors. And if people really get used to more ordering in food and so on, that's going to affect their business as well. So I think it's more feeding off of existing trends rather than anything completely new. That's going to cause difficulty. Different topic, but kind of looking at the future of cities. How is commercial real estate going to adapt to the post-COVID world? And are we done with these big flashy city headquarters? Well, I'm not sure I want to be in that business of owning them. Yeah, I think there's gonna be a lot of pressure on commercial real estate, people probably sharing desks, not need as much office space as before. By the same token, you're getting an offset in people with bigger houses, and maybe more suburban office buildings. But I think it's going to be a lot of pressure on commercial real estate as very expensive. Major cities. Now these things go in cycles after World War II. You had the huge development of the suburbs. And then, of course, more recently, you go back about 10 years ago. And younger people, millennials, they wanted to be in the city. They wanted to be where the action is. A lot of them didn't even have driver's licenses. They wanted to be a place they could walk to work, to stores, shops and theaters, etc., etc. Now you've got it swinging the other way. I don't think you would say that these major cities are dead. But I do think That there probably going to have to be some major changes for them to again become attractive. Where do salaries go from here? Are we going to see compensation to our highest earners plummet as companies no longer pay a premium to employees who live in higher cost of living cities? People are allowed to work in much cheaper locales now. That doesn't necessarily mean, though, that they're paid less. Salaries are really ultimately based on the cost of living. And if you have people moving out of expensive cities into cheaper areas are probably going to put downward pressure relatively on wages. However, having said that, we're probably in a cycle now where labor is gonna do better than capital. You go through periodic cycles. So we look at charts of profits, share of national income, as opposed to labor compensation and their mirror images. And neither side gets the upper hand. And definitely, you wouldn't expect that in a democracy. But capital profits have had a very high share relatively in recent years. It's staring down labor share, I think, is probably going to increase, I think, probably, in general, at least on the sort of the blue-collar level, you're probably going to see higher real incomes. What's the future of childcare and schooling in our country? And are we about to see a major disruption there? What happens typically when you get traumatic situations is that fertility rates drop. And that, no doubt, we will see that revealed in incoming months, coming quarters. A lot of people simply had to postpone childcare, child rearing, child birth, marriages, and so forth. There may be a lot more emphasis on childcare, government-supported childcare. But I'm not sure that that's going to make a huge difference in terms of birth rates. We've seen women fall out of the workforce at a much higher rate because of the childcare crisis. Does this trend persist post-COVID? And should the government be stepping in to fix it? If you look at the labor participation right now, this is a percentage of people who are either working or actively looking for work. That labor, the participation rate for men in this country has been declining throughout the whole post-war period. Women rushed into the labor force starting back in the 60s and 70s. But actually shy about 10 years ago, their participation rates peak and they started down, I think. Right now, they have gotten a further push down with a pandemic, and the necessity of staying home to take care of children, and so on. So we probably are going to see a continuation of these trends. Now, what has filled the gap in this country is immigrants. And I think it's probably going to help this country in an era when birth rates are declining. Are we going to have a stronger the economy in 2021 than we did before the pandemic hit? No, it doesn't look that way. It doesn't look that way. We're making up part of the shortfall, obviously. But it looks to us as though economic growth this year is going to be muted. And the facts are that all this money that's been pumped out and into individuals a year ago, back in December, and now more recently, it's not being spent, it's been saved. A year ago, all that money went out to consumers, save 71%. And what's interesting is people at the bottom of the income heap were the biggest savers. A survey shows that 16% of millennials don't have $400 for emergencies. So you expect them to spend it all, but they saved it. So I think that we're going to see a much slower economic growth as we move through the year, and it's gonna disappoint a lot of people, including equity investors. I think consumers are going to continue to hang on to allow that stimulus money. How long will it take for the economy to fully recover? And what will the shape of what does recovery look like? I think it'll take a couple of years. Matter of fact, if you look at some of these forecasting bodies, International Monetary Fund, the Congressional Budget Office, which is nonpartisan, they really don't see the economy getting back to where it was before the pandemic started. Until next year, or maybe even later. And I think that very well could be the case. Again, when you say recovery, as we talked earlier, it isn't just sort of the total. It isn't the total GDP, it's what's the composition. If you're operating a bricks and mortar store, in a mall, you may never get back. It may be curtains, I think. It'll be well into next year before we'll be back to the levels of total economic activity that we had before the pandemic hit. I know sometimes people talk about a K-shaped recovery or a W. Or a U. Is there a certain shape that you see this recovery taking in the next few years? I think you're going to see a change in consumer spending. You're probably going to see more government involvement in the economy, a bigger share of the economic pie going to the government. That is the historic trend. Whenever there are major problems, government tends to increase its activity. That certainly was resolved going back to the Great Depression. As I say, I think consumers are probably going to be rebuilding their assets and liquidity, paying off debt. Increasing saving means that incomes are going to grow faster than spending. And again, that's a factor that subdues economic growth.